Good evening, students. Welcome back. So today we'll pick up some other topics. Okay, so a couple of chapters we plan to cover. So I'll first of all start my discussion with this discussion around the standards on assurance engagement. Okay, so this is about SAE 3400, SAE 3402, SAE 3420, and then we'll also discuss today around the review. Okay, so you can say if you are looking at the study material, so it's chapter 10 and 11 that we plan to discuss, right? Now, talking about these engagements again, see, if you look at this discussion that we had on the special purpose, okay, wherein we talked about assurance, wherein we talked about some other procedures. Now, you can say on the same lines, now we are looking at some of the special projects which are related to assurance only. Okay, so again, the point is that what is the scope? Scope is that of the assurance. Okay, but in respect of this assurance scoping, or in respect of this assurance engagement, it's not the statutory audit that we are discussing. It's other than statutory audit that we are discussing, right? Now, let's talk about this prospective financial information and this SAE 3400, which talks about examination of prospective financial information. Now, in this case, first of all, we should understand what is prospective financial information, because if you were to examine something, so what do? You'll have to understand the underlying information. That's what we have been discussing all through. Yes or no? So now, for the purposes of our examination, what is going to be our first step? To understand this prospective financial information. Now, as the terminology suggests, prospective financial information means something which is based on projections. Okay. And if you are looking at something which is about the projections, so of course, we are not looking at the actual data or the historical information. See, what is historical information? Historical information means you are looking at the past information effectively. Let's suppose for the financial year 25-26, if you talk about. Okay, so these numbers are already in place, means these are actual. Correct. So that's why you can say these are the transactions which have taken place. So that's why, what do you call them as? You call them as financial information which is historical, right? But when it comes to prospective, we are not talking about historical. So that's the biggest difference. Huh? We are talking about something which has to occur in future. And in relation to that, we are trying to, you can say, project what is going to be the numbers in terms of revenues, in terms of expenses, in terms of profitability or the losses, whatever be the case. Okay. So now, as regards this prospective financial information, we are talking about financial information which is in relation to the future, means in relation to the transactions which are expected to occur in future. Again, we are not sure about the future. So that's why, what do you say? Can you be certain about it? Answer is no, you can't be certain about it. So that's why, what do? You'll have to estimate. And for you to estimate that, what do you need? The most important part, assumptions, right? Now, when it comes to the assumptions, and because it's an estimation, right? So that's why what will happen? That's why you will find judgment will have to be involved. Yes or no? you will find that the judgment will have to be involved. Now, what do you mean by judgment to be involved? And what do you mean by this projections? So let's take an example for this. Let's suppose management has projected the amount of revenues the company is going to earn in the next 5 years. Okay, now as simple as that. Now in this case, because we are talking about future, so can we say that this number is going to be certain? Not really, because you don't know whether this revenue will actually be taking place or not. Now one may say that if the company has the contracts, so that's very good. You can say that can become the basis. Okay, but to say that because the basis is there, so that's why you'll always have that sort of number in place may not be appropriate. Yes or no? Right? So that's why, what do you think? What do you assess? You'll have to bring in some assumptions. You'll have to think about it. And that's where the judgment will also get involved. Right? Now the question arises that when it comes to the assumptions, when it comes to the projections, if let's suppose we talk about this forecast, okay, now where do you need that? Now management may require this information for various purposes. For example, management is projecting the information for their internal analysis. That could be one of the reasons. Or maybe the management is required to submit this to the stakeholders, to the investors. Maybe the management is required to submit it to the bankers or to the financial institution. Why? Because they are planning some funds wherein the future projections are required to be looked at. Yeah. So there can be various reasons because of which this information may be required. So let's look at some small examples around it. X Limited may project a course of action to be taken when one or more hypothetical situations arise, such as creating a new product to meet the demand of expected market growth. As a result of assuming the possibility of different events occurring, financial projections typically serve as an outline for evaluating the desired outcomes. X Limited expects to see, including its financials, cash flow, and operational outcomes. Okay. Another example. A company is planning to raise funds from a prospective equity investor. Let's suppose there's an investor. He wants to invest the money into the company. Okay. And that's why the company is required to prepare this projection. Why? For the assessment by the investor. Yes or no? Another example, a company is in the process of setting up a new plant. It needs financial assistance. What do you mean by that? Very simply, it needs funds. Okay, it needs loan from a bank, which could be in the form of term loan, working capital credit facilities. Okay, so there are a lot of ways through which this funding can be obtained. The company has prepared a projection of its profits, cash flows for the next 7 years, along with its underlying assumptions. Yeah. So we can see there are various reasons. Now, many a times it could also be for their internal purposes. Okay. So now it's not necessary that this will always be for the external purposes. This can always be for internal purposes. Okay. Now, see, because we are talking about information of the entity, so that's why when it comes to the preparation and the presentation of this prospective financial information, Now, who will have this responsibility? You can say it's required to be looked at in a similar manner the way you will look at the financial statements. Why? Because who is required to prepare the financial statements? Management, company only. Auditor is required to check that, examine that. Okay. You can say verification will be done by the auditor. Auditor will not be preparing that. Yes, so in a similar manner, you can now say that those financial statements are replaced by another type of information. So financial statement is what? Historical information. Now you can say the company will prepare financial information for the future. So that's why you have this prospective financial information. Okay. Now, in this case, when the prospective financial information is involved, okay, which is required to be prepared, presented. So who will have this responsibility? It's the management. See, the basis of preparation which the company will have to follow. Where does it come from? It will come from the management, means the basic data which will use for projections. Next. Now, when you talk about some of the inputs which the management may use, so that input may have to be processed, okay, to let's suppose bring it to a level of what you call as projections. So you can say some of the assumptions will then get involved. Now, who will make those assumptions? It's again the management of the company, right? So therefore, at the first level, once again, similar to what you find in case of financial system statements, here again, the management will have the responsibility. Can the professional accountants be associated with prospective financial information? Okay. Now, in this case, if you read this clause 3, it states that a chartered accountant in practice shall be deemed to be guilty of professional misconduct if he permits his name or the name of his firm to be used in connection with estimate of earnings contingent upon future transactions in a manner which may lead to the belief that he vouches for the accuracy. So of course he can't do that. Okay. The above clause does not preclude a chartered accountant from associating his name with prospective financial statements. A CA can participate in preparation and can review them, provided he clearly indicates in his report sources of information, basis of the forecast, and also many major assumptions which are made. Okay, now because we are talking about examination of prospective financial information, so here comes the part, if let's suppose any such information is required to be examined. Now, what is going to be the key aspect therein? See, the key aspect therein would be the assumptions always. See, any such information is always, you can say, what is the basis for that? Assumptions. Generally, when you are required to examine that, what do you really focus on? In most of the times, you focus on the arithmetical accuracy of the work. Okay, you may have this Excel file. Now, is that required to be done? Can we say that's also one of the procedures? No doubt. That's one of the procedures. But one has to understand the fact that it's not the only procedure. Okay, it's not the only procedure. And over and above, there are important procedures around this examination, and the one for the same happens to be assumptions. Okay, you can say the most critical, which you cannot ignore, because if you ignore this, then to check the arithmetical accuracy is what? That's, you can say, is not a technical piece, isn't it? And that's, you can say, which is more of a clerical sort of piece of checking. But when it comes to the assumptions, therein you are applying the judgments also. You are also evaluating what the management has thought through. Yes or no? Because the management has applied judgment, so they must have thought through. So you are also trying to get into that, isn't it? Now, when it comes to this assurance engagement wherein the examination will be done. Now, should the auditor be involved in those acceptance procedures? Answer is yes. See, here again, what do you have? You have an assurance engagement. So wherever you have the assurance engagement, what do you need? You will need all sort of procedures in relation to independence, in relation to code of ethics, right? So they all become very important procedures, right? Okay. Now the question arises, what are the matters you'll consider in relation to those procedures? See, first is, of course, the knowledge that you obtain, maybe on the basis of the current assessment and on the basis of any previous engagement which may be continued. Management's competence. Why is that important? Because if the management is competent, then you will expect a level of information wherein the chances of misstatement are going to be lower. Yes or no? Because if, let's suppose, a person is competent to do the work, that's when you will expect the quality is there. Otherwise, will you expect the quality to be there? Not necessarily. Yes or no? Not necessarily. So that's why we can say that is another very important aspect around this, right? Then, of course, the understanding of the business plays a very important role. That is also one of the factors for one to look into, right? So all of these play a very important role as far as this assessment is concerned. Correct? Now, moving further. If, let's suppose, this examination is done, now what is going to be the form of the report? Now this is an important part. Why? Because see, over here we are looking at a different type of engagement, isn't it? This no doubt is not a routine statutory audit, correct? It's different from that. Different in terms of what is really required to be done. Okay, now in this case, when it comes to the report, so what do you have? You have this title, addressee, identification of prospective financial information. Now this is important. Why? Because what is that information which is getting examined? So that's an important part. Reference to auditing standards applicable to examination of prospective financial information. So of course we know about this SE that we are considering. Then the management's responsibility. So that needs to be specified. That's a very important part. So any report you'll see, you will find those management's responsibilities. Okay. when applicable, a reference to the purpose or the restrictions. Okay, so purpose definitely you'll find, and when it comes to the restriction, now in the previous sessions we have talked about it. Now, what do you mean by restriction? See, restriction means because we are once again looking at a specialized information, correct? And therefore, the report which goes out is also a specialized one. So that's why the scope of the practitioner and the management will decide who is going to be the beneficiary of this report. Means who is going to have this report, means why is this report required, who do you really address to, correct? And it's meant for only those persons, right? So that's why in such a case it becomes important to look into the aspect around the restrictions on the distribution. Okay, again, this is similar to the one, if you remember, we talked about in the previous sessions also. Next, statement that the examination procedures included examination on a test check base. Why? Because when it comes to the examination or any sort of assurance procedure, all this while, what is it that we have discussed? It's a test check, okay? So we are not looking at 100% testing, right? So because it's a test check, so that's why somewhere in the report, the practitioner should specify that, right? Next, statement of negative assurance as to whether the assumptions provide a reasonable basis. Opinion as to whether the information is properly prepared. Appropriate caveats wherever you find them relevant, and then of course this will be signed off by the practitioner with the date in place. So that's a standard thing you will find in respect of any of these types of engagements, correct? Now, moving further, essay 3402, wherein we'll talk about assurance reports on controls at a service organization. Now, if you talk about service organization, we have already discussed this. Yes or no? So if you remember, we have already discussed this. And before we really move on to this, let's also have the thoughts, okay, or have the questions as around the topic we just covered before we move on to this. Okay, right? So I understand Prashant is there. So Prashant, if you have any questions. Anyone, any questions, any doubts if you have?
No, sir. Thank you.
No?
No.
Sure. All right, great. Now, as regards this next standard, SA 3402. See, now we are talking about assurance report on controls at a service organization. So there was a discussion we have had as around the working in relation to a service organization in terms of the procedures to be performed. Okay. Now let's read this. So SA 3402 deals with assurance engagements undertaken by a professional accountant to provide a report for use by the user entities and their auditors. Okay, so we are talking about user entity and their auditors on the control of a service organization that provides a service to user entities that it is likely to be relevant to user entities' internal control. It complements SA 402. Now, this is the one that we discussed. In that, reports prepared in accordance with this SAE are capable of providing appropriate evidence under SA 402. Let's quickly flip through this scope and then we'll look at that structure also, just to get some more clarity around it. See, this SAE applies only when service organization is responsible for or otherwise able to make an assertion about the suitable design of controls. Okay. It does not deal with assurance engagements. To report only on whether the controls at a service organization operated as described, or to report only on controls at a service organization other than those related to a service that is likely to be relevant to user entities' internal control as it relates to financial reporting. Okay, now what is a service organization? What is a user entity? And in the context of this scoping, okay, that we discussed, now who are their auditors? So all of these terms we will now discuss, right? So I'll just take you to a working file. Just give me a minute. See, we have already talked about it, but for the purposes of your reference, I'll just try to give you this perspective again. So I'll just go back to the same example. Say we have this entity A Limited, which has outsourced, say, its payroll function to B Limited. Now, PQR and company is the auditor. Now, in this case, for the purposes of audit of financial statements and the controls around that, the function which is not there in the company A Limited, you can say which been outsourced to another company B Limited. What do? You'll have to go audit the payroll in terms of what B is doing. Because if payroll is with B, then you need to go and audit B. Only then you will get the clarity around it. Yes or no? So that's why as an auditor, what do? Now, controls which this entity will have, that's what you will try to now check. Correct? And we talked about this earlier as well. In this case, A Limited is the user entity. B Limited is the service organization. PQR is the auditor of user entity. So that's why PQR is also called as user auditor. Okay, user auditor. So these are the terms. Right? And this is actually the purpose. Correct? Now, as around this part, let's try to get some more clarity around it. To obtain reasonable assurance about whether in all material respects, based on the suitable criteria, means whatever criteria they have established, service organization system. So in our example, it's P Limited. Fairly presents the system as designed and implemented throughout the specified period. Or in the case of a type 1 report, as at a specified date. Okay. The controls related to the control objectives stated in the service organization's description of its system were suitably designed throughout the specified period. Or you can say in the case of a type 1 report, as at a specified date. Were included in the scope of an engagement. The controls operated effectively, okay, to provide reasonable assurance that the control objectives stated in the service organization's description of its system were achieved throughout the specified period.
Just one question, sir. Sorry to
Yes.
interrupt.
Yeah, no, sure. Please go ahead.
In the example you had given, sir, you did not mention about the service auditor. You simply said that the main auditor, that is user entities auditor, will go and audit the B Limited. But here we
Correct.
are talking about the service auditor.
Correct.
So that example.
So what is the disconnect? Okay.
So
Right.
the
Yeah.
sir.
So I'll explain you the disconnect. Okay. Now, before I move further, let us just go back to that example. Okay, so the example I've used is just to give you the context. And idea was what? Idea was to make you familiar with what a user entity is, what a service organization is, and who is the user auditor. Now, in this case, we discussed that this user auditor has an objective. What is the objective? He wants comfort over the control system of B Limited. Correct? So that's what the user auditor wants. Now, how do you achieve that? So if you go back to the auditing standard that we discussed earlier, we discussed that this user auditor will ask for two types of reports. Can you tell me what are those two types?
Type 1, type 2.
Very good. So type 1, type 2. So his target is what? To get type 1 or type 2. Now, once this type 1, type 2 report is obtained, can we say that user auditor is now through with this? And he will not be involved in any sort of further checking? The answer is no. See, when it comes to the audit, in terms of its extent, in terms of the procedures, we cannot pre-assess. You cannot have a certainty that these are the only procedures you'll have. Of course, you'll plan. But can you say with certainty before you start the audit that these are the only procedures I'm going to perform and I'll not go beyond that? Answer is no. So the same thing applies over here also. So once you obtain these, or this one, whatever be the case, right? User auditor is not through. So he will then decide What does it want to obtain further, if at all something is required. And in respect of this control system, maybe there are a few areas user auditor may want to get onto. You can say in a way that instead of engaging somebody else, he may want to go there, he may want to check that. So can we say there is any sort of restriction? Answer is no. The only thing is that is not going to be easy, both for the entity as well as for the user auditors. That's why what you find, he will be looking at some of the things to get onto this point. Correct? Now, in this case, these objectives of the user auditor, who is going to help on this piece? Service auditor. Why? Because two auditors are different at two places. Okay. Prashant, clear on this now?
Yes, sir. Perfect. Thank you.
Very good. Now, type 1, type 2 report, I think we have already talked about it. So I'll not get into this once again because we have already discussed this earlier as to what does it include. What do you mean by type 1, type 2 report? Right? Now, in this case, please remember the fact that once again, we are talking about assurance. In some checking is involved. So that's why it's important to understand the reporting. And many a times, what will happen? See, the report gives you the clarity. Yes or no? In many cases, the report gives you the clarity as to what is required to be included, what will be the scoping. Means you get this clarity or the understanding through the report. So the service auditor's assurance report shall include the following basic elements. A title that clearly indicates the report is an independent service auditor's assurance report. Okay, so that's the title. So that will always be the one involving independence. Addressee, of course. Identification of service organization's description of its system. Service organization's assertion, which includes the matters for a type 2 report or type 1, depending on the case. Those parts of service organization's description of its system, if any, that are not covered by service auditor's opinion. If the description refers to need for complementary user entity controls, a statement that the service auditor has not evaluated the suitability of design or operating effectiveness of complementary user entity controls, and that the control objectives stated therein can be achieved only if complementary user entity controls are suitably designed or operated effectively. Okay. If the services are performed by sub-service organization, nature of activities performed by sub-service organization, then of course identification of the criteria, party specifying the control objectives. Okay. Then the statement around this type 2, then the statement that service organization is responsible for this entire control system, sort of. Okay, so I'm not just reading this completely, just giving you the perspective. Statement that service auditor's responsibility is to express an opinion. Why? Because that's been called for. So does it mean that the user auditor cannot review, cannot check, cannot perform? So we are not saying that. We are saying as a part of this sort of standard, we are looking at a situation like that. Okay. Now, statement that the engagement was performed in accordance with this SAE. Yeah, so that's something you'll always have. Summary of service auditors' procedures to obtain general reasonable assurance, and a statement of service auditors' belief that the evidence obtained is sufficient and appropriate. Okay. Statement of the limitations of control, and in the case of type 2 report, of the risk of projecting to future periods. Service auditor's opinion, of course, in relation to type 1, type 2. And then, of course, you have this signature as around this. Additional matters, at times you may get to see this. And of course, if there are any sort of modifications, you'll have in place. Okay. Now, moving on to this next essay, and then of course we'll pick up the questions around this. So when you talk about SAE 3420, now what do you have? Assurance engagements to report on the compilation of pro forma financial information. Okay. Included in a prospectus. Now, generally, if you understand this pro forma financial information, this you will find is meant for the purposes of prospectus in most of the cases. Now, once again, I think before we get on to the compilation, assurance engagement, the procedures, it's important to understand what is pro forma financial information. Yes or no? That's an important part around. So this pro forma financial information refers to financial information shown together with adjustments to illustrate the impact of an event or transaction on unadjusted financial information as if the event had occurred or the transaction had been undertaken at an earlier date. Now, what do you mean by that earlier date? You can say you are trying to think of a situation. So let's suppose any event is going to happen. Now, if let's suppose that event were to take place, say, as on today, what will be the impact of that? Right? So considering that impact, you need to think about this financial information as to how that financial information will change. Okay. So this information is normally used in offer documents to demonstrate effect of a transaction on financial statements of a company as if those transactions had occurred at an earlier date. Pro forma may take the form of P&L and balance sheet to illustrate how the transactions might have affected the assets, liabilities, earnings of the user. They also include notes in relation to significant aspects of transactions, assumptions used to prepare the pro forma, and the adjustments made. The purpose of pro forma included in a prospectus is solely to illustrate impact of significant event or a transaction on unadjusted financial information. So see, important part is what? We understand what this pro forma financial information is. Because what will happen? The moment you will get a clarity, okay, as to what is this pro forma financial information, you will automatically be able to think about the procedures. Yes or no? But if let's suppose you don't know about this at all, will you be able to think about the procedures? No. So in such a case, what will happen? You will only be looking at cramming the part related to this. Yeah. Which is not appropriate. Why? Because most of these things which you talk about in the form of assurance, or in the form of any type of examination that you have, what do you find therein? There are a lot of similarities. Yes, sir. So you can say engagement acceptance formalities are quite similar. You can say in terms of planning procedures are quite similar. Correct. So there are a lot of similarities around that, which are important. Okay. Now, here again, what are the objectives? So let's quickly flip through the objectives. To obtain reasonable assurance about whether the pro forma financial information has been compiled in all material respects. Of course, we'll go by the materiality. By the responsible party on the basis of applicable criteria. See, when it comes to a pro forma, so we are talking about an event or a transaction. Okay. What are you trying to do? You're just trying to think of the impact of that. Say it is at a particular date, and then you will be drawing the numbers accordingly. Okay. So in this case, what does it mean? It means for you to get on to the financial information, you need to have some criteria in place. Yes or no? Because otherwise, how do you prepare the financial information? How do you audit the financial information? In this case, it's not an audit. You can say procedures around it. How do you do that? All right. Okay. Now, what are the steps which you will find in case of compilation? So let's try to understand those steps. Identifying the source of unadjusted financial information to be used in compiling the pro forma financial information. Extracting the unadjusted financial information from that source. Okay. Making the pro forma adjustments to unadjusted financial information for the purpose for which this pro forma financial information will be presented, and eventually presenting the resulting pro forma financial information with accompanying disclosures. Okay. Now, let's try to flip through the procedures. Will you require engagement acceptance? Yes. Now, what are the things you will have? See, independence, of course, to begin with, right? And in respect of this independence, you can always say some of the requirements around code of ethics. Okay. All of those factors become important, correct? Now, once you have this evaluation, what do you need? Planning. Yes or no? See, around the planning, we discussed that planning is not something which is limited to a particular type of engagement. See, planning is something which is essential to every activity you do. Any project you'll have, you'll need a plan in place. Correct? Because without the plan in place, how do you execute that project? Yes or no? So that's why it plays an important role. Okay. Now the practitioners shall assess whether the applicable criteria are suitable as required by framework for assurance engagements. Shall consider materiality. So if you remember, we discussed that it's required to be looked at in all material aspects. What do you mean by that? Materiality is required to be checked. Yes or no? So that will become the basis, right? Now, because we'll have some source. Why? Because that source gives you the information. You can say when you will be extracting that information, so the source has to be in place. So that's why when it comes to that source, appropriateness of that is again important, right? Next, as around the financial information. Now, whether it's arising from that source, its appropriateness. So that is again the most important part. Okay. And the practitioner shall obtain evidence about appropriateness. So what are the pro forma adjustments that you'll find for which this will be included? Adjustments to unadjusted financial information that illustrate the impact of significant event or transaction, as if the event had occurred or the transaction had been undertaken at an earlier date for the purposes of illustration only. Now, please don't think that it's the actual thing. That's not possible. Yes or no? That's not possible. Next, adjustments to unadjusted financial information that are necessary for the pro forma financial information to be compiled on a basis consistent with applicable financial reporting framework of the reporting entity and its accounting policies under that framework. Right? Now, moving further. When it comes to the reporting part around such type of report. Now here again, what do you have? You have this title, addressee, and then comes the part related to the financial information. So means pro forma financial information, which is identified. Because that is being used for the purposes of performing the procedures. Herein you also talk about the source from which you extract this. Okay. And whether or not an audit or review report on such a source has been published. Period which is covered by or the date of pro forma. Reference to applicable criteria on the basis of which responsible party has performed the compilation. Okay. Next. In the report, you'll always talk about the management responsibility. Yes or no? So it's the same thing you'll have here again. Statement that the responsible party is who? Management is responsible for compiling the pro forma financial information. Okay. Then comes the part around responsibilities of the practitioner. So you put down the one for the management. Now the one for the practitioner. Okay, so that's about expressing an opinion. Practitioner is not responsible for updating, reissuing the reports. Okay. And the purpose around it. So where is this forma financial information included? Right? Next. Then you have this sign off, date, place. Okay, now in this case, what we can now do is we can just pick up few questions around this. So just give me a minute. I'll move on to the questions. Okay, just give me a minute. I'll just move on to this question now. Okay, so there we are. So what I've done is I've pulled out this RTP wherein we have this question. So let's try to understand this part. Okay. This is the one for January 26. I think we can just look at this first and then we'll pick up some more questions also. Right? So here we go. Moksha Limited has prepared prospective financial information for an upcoming expansion project. Okay. So we are talking about the company, right? So the company has prepared this prospective financial information. So there's an expansion project for which this has been prepared. On review, auditor finds that basis of certain assumptions is not disclosed. Highly uncertain assumptions, lack sensitivity analysis, date of preparation is missing. So these are the few observations. Highly uncertain assumptions, lack sensitivity analysis, date of preparation is missing. Okay, so you can say these are the three observations you find. Right? In addition, a recent change in accounting policy relating to revenue recognition has not been reflected. This is another one. In this context, what should the auditor consider while assessing the presentation and disclosure of prospective financial information? Okay, so I'll just make a reference of these points. Okay. Now, in this case, what should the auditor consider while assessing the presentation and disclosure of prospective financial information given the situation we have and its underlying assumptions? Understood? Yeah. So any questions, any doubts in terms of this understanding of the question if you have? and of course your thought process. So any thoughts if you have on this, Prashant?
So the understanding, as far as understanding is concerned, there is no doubt.
Right, very good.
So only thing is the answering part. So the this is the he will first of all evaluate these assumptions which are not disclosed and which
Right,
are highly uncertain, some
right,
of which, and which lack the and preparation date is missing, and the changes in accounting policy relating to revenue recognition has not been reflected, because
right,
all these present the basis which he has to certify. He will be vouching the basis.
correct,
So that part is, if he will evaluate whether what is the materiality and how, if what is the impact of these
right,
assumptions on the financial information PFI. So
right.
he after that he will discuss with the management. If he considers that these are significant and material, he will ask the management to make appropriate changes, amendments to these. And if the management refuses, he will consider uh, qualifying or withdrawing.
Okay, great. So let's look at this. When assessing the presentation and disclosure of prospective financial information and the underlying assumptions, in addition to specific requirements of any relevant statutes, regulations, as well as relevant professional pronouncements, it needs to be considered whether. So, what are the considerations? Presentation is informative, it's not misleading. It's okay. Accounting policies are clearly disclosed in the notes too. You can say this prospective financial information. So, disclosure around the accounting policies. Again, a very important disclosure. Now comes the most important part, assumptions. See, in these type of engagements, if let's suppose you were to answer this question in the exam, okay, now what is going to be the most important part? Let me just read some of the other points as well. So the next one talks about the considerations related to the date as of which prospective financial information was prepared is disclosed. So management needs to confirm that the assumptions are appropriate as of that date, even though underlying assumptions may have been accumulated over a period of time. Basis of establishing points in a range is clearly indicated, and range is not selected in a biased or misleading manner when the results shown in the prospective financial information are expressed in the terms of a range. If there is any change in accounting policy of the entity from that disclosed in most recent historical financial statements, okay, whether the reason for the change and effect of such change on prospective financial information has been adequately disclosed. Now, coming back to the point I was just trying to explain, let's read this third point. The assumptions are adequately disclosed. It needs to be clear whether the assumptions represent management's best estimates or are hypothetical, and when the assumptions are made in areas that are material, that are subject to high degree of uncertainty, this uncertainty and the resulting sensitivity of the results need to be adequately needs to be adequately disclosed. See, I was just trying to explain you the perspective that while you answer any question, okay, and let's suppose if you have, let's suppose this question in the exam, say for example, for 6 marks, Okay, so what do you plan to do? Let's suppose you plan to give 6 points, right? Or if let's suppose you have this question in the exam, let's say for 5 marks. I'm not saying for each and every mark you'll have 1 point. I'm just trying to take an example for this. See, in this case, the examiner wants the most important part of that particular topic. Okay, so what is the thought process? So what is the expectation? That whether you are aware of the most important element which is attached to that. So why do I say that? See, when it comes to any assurance engagement, now let's try to understand this point. Okay, so I'll just take this working file. As we discussed, that in respect of any assurance engagement, you will have various procedures. And a lot of such procedures are very common. For example, when we talked about engagement compliances, when we talked about planning procedures, a lot of procedures are similar. Whether you are examining, whether you are talking about prospective financial information examination, whether you are talking about audit, a lot of similarities are there, isn't it? Basis which you can always think of the audit procedures, you can always design the audit procedures, or you can see the procedures if that is not the audit. But for every area that you cover, for the every scope that you'll have, there will always be some peculiarities related to that particular area. Correct? Now, what do I mean by that? In respect of prospective financial information, what is the most important element? Assumptions. So that's why please try to understand that if the examiner is trying to test your knowledge, what is going to be the focus area of the examiner? Whether you understand this part or not. See, I'm not saying that other than this part, you need not know anything else. No, that's not the point. And obviously, that can never be the consideration, because when it comes to any examination, any sort of verification, you will need the processing of various types of procedures. Means you will need to perform various types of procedures. But at the same time, you also need to understand that some of those procedures are always going to be peculiar at times and quite important at times. So that's why in this case, if let's suppose you don't talk about these assumptions, so what impression you are trying to pass on, that you probably are not aware of such an important consideration. Yes or no? So maybe you are able to put down all the points. Let's suppose you have put down 6 points, which are all appropriate. I'm not denying that. Okay. To say that other than this, will the other procedures not be considered to be correct? Answer is yes. But I'm saying that's not the expectation. Okay. And even if let's suppose you get the marks, in such a case, you are not trying to impress him. Yeah, so that's a very important area for you to consider. And that's why if you have any sort of peculiarities in respect of any type of project, so that's what you should always try to get into. You should always try to get a clarity around it. And while you answer, you should always try to make sure that some of those points are taken care of. Means those should not be like completely ignored. Doesn't go down well otherwise. Okay, clear on this? Yeah,
Yes, sir. Perfect.
sure. So now we'll pick up some more questions. Just give me a minute. Right, so here we go. Okay, so let's look at this. A company has approached CA Hemant for an assurance report, right? Which is in respect of prospective financial information in relation to a project. On going through the project details, it's been noticed that depreciation reflected on proposed fixed assets to be acquired in the prospective financial information has been calculated in accordance with Income Tax Act. But do you do that? Do you follow income tax for such calculation? No. So you do that on the basis of estimated useful life. Yes or no? No disclosure is made in this respect. So at one place, what do you have? See, the life has not been used. The depreciation is calculated, okay, in accordance with the provisions of income tax. But even if, let's suppose, you are doing that, somewhere a disclosure in that respect becomes important. Now, in this case, how do you deal with this situation? So, what do you do in this situation? We are talking about assurance report on the same. Means it's an assurance engagement in respect of prospective financial information. So the important point is, what are your considerations? How do you do? How do you deal with this? What is going to be your approach in terms of various procedures you'll perform or you'll plan to perform? And of course, if there is anything around the reporting implications you believe need to be put in place. Yes, anyone? Yes, Prashant, would you like to share some thoughts around it?
So the CA Hemant should ensure he has to see that the prospective financial information reflect the correct and proper information, that they are prepared on the basis of proper assumptions. These assumptions are properly disclosed,
Right,
and the disclosure should be there in the PFI regarding the provisions which have been taken So in this particular case, the depreciation has been calculated on the basis of Income Tax Act, which is not the correct procedure.
Okay.
And they have not also made the disclosure in this regard that they have made this provision as per the Income Tax Act.
Okay.
So this is not the proper procedure which has been performed by the company vis-a-vis the PFI. So the CA Hemant will request the management to make the appropriate changes
Okay.
in the PFI,
Right.
and only on that basis he can provide the report if the changes are made in accordance with that.
Okay, great. So let's look at this. See, in these types of engagements, it's the duty of professional accountant to see that the prospective financial information is based on a consistent basis with what? To begin with, historical financial information, wherein you will apply the appropriate accounting principles. Means you top it up. So that's how you reach the prospective information. In case of a company, historical financial statements are prepared considering the Companies Act, and that becomes the basis for calculation of depreciation also. Right? So now, depreciation in the given case, what has been done? That's been calculated in accordance with income tax. That's not consistent with the basis that you follow for preparation of historical financial statements. So clearly, the basis that you will have for the preparation of the prospective information is wrong. Why? In respect of the depreciation. Correct. So to that extent, this problem is there. Yes or no? Now, the fact that the projection has not been prepared on a consistent basis with the financial, with the historical financial statements using appropriate accounting principles, this needs to be stated. Of course, so this needs to see, there are two ways. Either you get it corrected. If the management is doing that, it's okay. If they are not doing, what do? You will bring it out. Further, the presentation and disclosure are not adequate. And in such a case, what do? You will get onto an adverse or a qualified opinion. Yes or no? Now, again, we are assuming the misstatement has to be material in that case. At times, the auditor may also evaluate whether a withdrawal from this engagement is appropriate. Means that course of action he needs to evaluate. So once again, the point is that at every point of time to say that this withdrawal will be an appropriate thing may not be the correct answer. Okay. So one needs to assess that. So one needs to decide about it, whether that will be correct or not. So that's how you go about it. Okay. Next. I think in the next one, I'll have to just remove some of the points. But some of the information I think will remain marked for your purposes. Bansi Group is a leading institution running prestigious postgraduate courses. Okay. Its financial statements are audited by an independent auditor. Right. So we have this entity and the auditor. Before the start of this academic session, board of the institution had outsourced its entire process of inviting student applications, submission of applications, collection of application fees, including the late fees and such matters, to Easy Solutions Limited. Okay. So that's why, what do you have? We have this situation wherein you have an entity which you will call as user entity, and you have another entity which you call as service entity or service organization. Then we also have this reference of auditor of the user entity, which you call as user auditor. Correct? Which you call as user auditor. Moving further, auditors of the Bansi Group want to be sure about the design and operating effectiveness of controls at Easy Solutions Limited. What should be the nature of the report to be provided by auditors of Easy Solutions Limited, specifically for use by Bansi Group and its auditors in this regard in terms of SAE 3402. Now, we also have this reference of auditors of Easy Solutions Limited. What do you call them as? Means the terminology that you assign to them. Service auditor. Correct? Now, in this case, yes, so now in this case, let's talk about it. What should be the nature of the report? And in this context, you need to remember that it's something which is for the Bansi Group, means the user entity and its auditors. Yes. Any thoughts? Once again, Prashant, if you have on this.
So these processes which have been outsourced to Easy Solution are material processes. They have a significant impact on the financial statements of Bansi Group. So
Okay.
the user auditor would like to have the assurance about the internal controls at Easy Solutions Limited, nature
Okay.
of the controls and the design and the effectiveness of those controls
Right.
regarding this, because they constitute a significant item on the financial statements.
Right.
So the auditors nature of report to be provided by the auditors of Easy Solution Limited would be a type 2 report, in my opinion, sir.
Okay. And any other considerations you think that need to be put into place?
No, sir. That's it.
Sure. Great. Very good. So let's look at this. In this case, if you look at the auditors of Bansi Group, what do they need? They want to be sure about design and operating effectiveness of the controls of which organization, service organization, which is providing the services to Bansi Group. Correct? So in this case, when it comes to the design and operating effectiveness, where do you get this from? Type 2 report. And this is the one that we discussed, I think, in one of our sessions earlier as well. So therefore, auditors of Easy Solutions Limited, what do you call them as? Service auditor. Correct. Service auditor. They should provide such a report giving assurance on these matters. It should also include test of controls performed and details of deviations if there are any. Okay, right? Clear?
Yes.
Sure. So let's look at one more example. Management of S Limited. requests you to accept an engagement to report on the compilation of pro forma financial information to be included in the prospectus. In the light of SAE 3420, you need to comment which all factors you'll consider regarding the company acknowledging and understanding its responsibilities in this matter before you accept the engagement. I'm just hoping that you are clear on the question. Huh? Okay, so regarding the company acknowledging and understanding its responsibility. Yes. Any thoughts?
So before accepting the engagement, he will have requirement of independence and the code of ethics come with,
Okay.
and he will require the company to acknowledge that they are since these prospective financial information will be prepared by the management, they
Right.
will an acknowledgement from the company that they are preparing the prospective financial information by making adjustments, and those preparation are made on a consistent basis. The adjustments are applied in a consistent manner, and
Okay.
they give the desired result. So these acknowledgements should be taken from the management.
Okay. Great. So now let's look at this. The company's responsibility has to be acknowledged for what? See, in the given question, whose perspective you are required to consider? It's the management actually. Of course, you'll look at it from the auditor side, but whose perspective is that? It's the management. So the company's responsibility has to be acknowledged for the following matters. Means where do you want the company to take the responsibility for? In a very simple manner. First, adequately disclosing and describing the applicable criteria to the intended users if these are not publicly available. Of course, yes. So you can say the basis of preparation. Compiling the pro forma financial information on the basis of applied criteria, of course. So once you have the basis of preparation, then you get on to the preparation. Providing the practitioner with access to all the information when needed for the purpose of engagement, information of the inquiry, such as records, documentations, other material relevant to evaluating whether the pro forma has been compiled in all material respects on the basis of applicable criteria. Next, additional information that the practitioner may request from the responsible party for the purposes of engagement. Access to those within the entity and entity's advisors from whom the practitioner determines it necessary to obtain the evidence relating to evaluating whether the pro forma financial information has been compiled in all material respects on the basis of applicable criteria. When needed for the purposes of this engagement, access to appropriate individuals within the acquiry in a business combination. Right? Clear on this?
Yes, sir.
Any
Perfect.
any questions so far?
No, sir. Thank you.
All right. Now I think what we can do is we can just take a short break and we'll continue after that. Huh? So IT, what we can do is we can take a break now. Huh?
Yes, sir.
All right. Okay, so now I think we can pick up one more question. So I'll just share this document. Just give me a minute. Okay, so we have this case scenario basis which will pick up some questions. All right, so now below is the given draft text of the report on examination of prospective financial information. Okay, so it's a report on examination of prospective financial information of Top Edge Limited. So that's the name of the company. So what is the scope? Prospective financial information. And the name of the company is Top Edge Limited. Now, this is in relation to the company's upcoming project prepared by a staff member in a CA firm unfamiliar with drafting such reports. The report seems to be drafted in a casual manner and may consist of omissions and errors. Right? So that's the thought process. Now, if you look at the report, so it's a report on examination of prospective financial information. So that's how it starts. I think they put down the report, okay, in the question itself. So it's been addressed to the board of directors, then the name of the company, and then you have this content. So let's read out this report. What do you have? We have examined the projection of the upcoming project to come up at Ratnagiri of Top Edge Limited for the period from April to March 2000, April 24 to March 2030. Sorry, yes, April 24 to 30, as given in the prospective financial information from page 1 to 250 in accordance with SAE 3400. Preparation and presentation of the projection is the responsibility of the management and has been approved by the board of directors of the company. Okay. Now this is the other part. So preparation, presentation is the responsibility of the management, approved by the board of directors. Right? Now, our responsibility is to examine the evidence supporting the assumptions, excluding the hypothetical assumptions, and other information in the prospective financial information. Projection has been prepared using a set of assumptions that include hypothetical assumptions about future events and the management as actions that are not necessarily expected to occur. We have carried out our examination of prospective financial information thoroughly. So all of this is the part of the report, right? Further, in our opinion, the projection is properly prepared on the basis of assumptions as set out in note 1 to 50 to the prospective financial information and on a consistent basis with the historical financial statements using appropriate accounting principles. Even if the events anticipated under the hypothetical assumptions described above occur, actual results are still likely to be different from the projection since other anticipated events frequently do not occur as expected and the variation may be material. Now, for this report, you have this sign off by the professional, you can say the accountant, professional accountant. Then you have the signature, then you have the designation, and you have the membership number given. Right now, in this case, what is the next aspect? Now, in this case, what do you find? We have some questions to follow. Okay, so now we can just look at some of those questions. Whose responsibility is to list out assumptions? Whose responsibility is to list out the assumptions underlying the prospective financial information. So we have these four options: professional accountant issuing the report, auditor of the company issuing the report, management of the company, or you can say the banker of the company. So, what do you think is the most appropriate, or in the given situation, I would say the correct option? I don't think you have the most appropriate one, the correct one.
So I think so. C.
Okay. And why do you think it's C? So, any reasons, any thought process if you have?
So the assumptions will be listed out by the management, and he will then verify that the assumptions are consistent and the basis is correctly taken.
Okay. So, in this case, if you talk about listing the assumptions, now who is preparing this set? Of course, the management. So, one who prepares, of course, they will have to just put down everything around it in terms of the disclosures, etc. So, that's why in this case, will it be right to say that the one who is examining that, one who is verifying that, should be listing it out? Answer is no. So, they are not the one who is responsible for that. They are the one who are responsible only for checking, only for examination, not for listing the same. And banker is an external party, so banker has got no role in this. Okay, so this is completely out of the context. So that's why what's the right option? Clearly, it has to be C. Yes. Next, which of the following statements is most appropriate? So now we are asked about the most appropriate regarding use of prospective financial information to be included in such a report. Okay. First, intended use of projection is required to be disclosed. It is further necessary to caution the users regarding inappropriateness of projections for other purposes. It is discretionary to state intended use of projection in such a report. Intended use of projection is required to be disclosed. It is not necessary to caution the users regarding the inappropriateness of projections for other purposes. D. It's the prerogative of the management to use report in the manner it deems fit. So I think here again it seems to be quite a straightforward answer. Any thoughts?
A.
A. Very good. Why? Because no doubt intended use of projection you will disclose. Further, it's necessary to caution the users around what? Regarding the inappropriateness of projections. Why? Because it's meant for a specific purpose. Okay, it's not meant for, you can say, the one that you'll find the financial statements which could be used for various purposes. Correct? That will not be the right thing to consider in this case. Okay. Next. Which of the following is most appropriate? So once again, we are asked about the most appropriate option regarding the examination of prospective financial information by a chartered accountant. Number one, accuracy of projections is vouched for based upon performing procedures clearly. Projections can go haywire. It depends upon professional judgment of the chartered accountant to vouch for accuracy of projections. Accuracy of the projections is not at all vouched for in an assurance report on prospective financial information. The matter of accuracy of projections or otherwise is not domain of such an examination. Therefore, there is no such reporting requirement. So tell me, in this case, what do you think is the most appropriate option?
C, sir.
C. Now, why C? Any thoughts?
Sir, he cannot vouch for the accuracy of the projections. He can only state that the basis of the projections or the assumptions is correct and consistent.
Yeah, so it's all about the consistency, isn't it?
Yes. Yes,
Yes
sir.
or no? Right. Okay. Next one. Now, which of the following is the most appropriate statement regarding the UDIN? UDIN, we all understand what is UDIN. It's required to be put on the reports. Now, which of the following is the most appropriate one in that context? First, it's mandatory to state the UDIN in such type of reports. B, desirable to state means it's not mandatory. You can say you may give this, but it's not mandatory. Okay. It's not required to state the UDIN because it's not an audit. D, once again, we are saying it's not required to state the UDIN as it's not an engagement related to historical financial information. Now, in this case, which one you think is the, I would say, the correct answer actually?
So C.
C, why C?
So since it's not an audit engagement, so he.
Okay, so now in this case, the right option is A. Why? Because when it comes to UDIN, see, UDIN is meant for an assurance engagement. Let's suppose you issue a certificate as a practitioner. Are you required to put the UDIN? Yes. Or to say that you will put the UDIN only on the audit report when you are conducting a statutory audit. So is that the only requirement for the UDIN? No. UDIN is something that is meant for assurance engagements. Okay, clear on this?
Yes, sir. Thank you.
Great. All right, so now before we move further, any questions, any doubts if you have?
No, sir.
Okay, so now we'll move on to the next part. So the next topic is about review. So now we will be talking about review. I would say a very interesting topic, and in respect of the procedures you are required to follow. So let's look at that. So I'll just share the document. Just give me a minute. Let me just get on to this. Okay, so here we go. Now, now we are talking about, you can say, an assurance engagement only. But we are talking about review. We are not talking about audit. Now, generally, when you talk about the audit procedures, okay, so I'm just talking about the audit procedures generally. So what do? We use this term review in respect of various audit procedures as well. So many a times we use the word that review of information, review of some details, review of the contracts. Yes or no? So this terminology is used in the context of that. Many a times we do that. But now what we will try to do is we will try to understand the technical meaning which is attached to this term review. Okay. Now, as far as the scoping is concerned, and if we go by the terminology, if we go by the legal meaning around this term review, see, there's a huge difference between an audit and a review. So, if let's suppose you are talking about historical financial statements, okay, and when it comes to its review, say for example, or say when it comes to its audit, I think the first point is what? The first point is about understanding what do you mean by historical financial statements. So, any thoughts, Prashant, if you'd like to share on this? What is this historical financial statement? What do you mean by that? Any thoughts? Historical financial statements?
So historical financial statement would be the P&L, balance sheet,
Okay. But
cash flow.
but why do you call that as historical? So if let's suppose that is the case, why do you or what's the difference between financial statements and historical financial statements? So if let's suppose I have to rephrase my question, let me just put it this way. What's the difference between these two? Right? So what's the difference?
No idea, sir.
No idea. Great. So I think what we will do is we will begin with this term, right? Because I believe it's important for you to have a clarity around this term first of all. Why is this important? Because there are a lot of topics we have covered wherein we didn't use the term historical, wherein we use the term projection, forecast, prospective, pro forma. Yes or no?
Yes.
So let's try to understand. Say we have this financial year 24-25, right? We have this financial year 25-26, and then we have this financial year 26-27. Now I'm talking about 3 financial years, okay? And then I'm also talking about a period which comes after this financial year 26-27. So I'm just keeping this period open, right? Now, if you look at this financial year 24-25, this period is already over. Yes or no? So any transaction during 24-25 have already been occurred. So all those transactions have already taken place. Yes or no? So if let's suppose you were to get into the numbers, means you want to check the amount which was involved in a particular transaction, the amount which is related to a particular contract, which you will want to record. Or if let's suppose if you want to record the numbers in the books of accounts, in the financial statements, do you have that? Answer is yes, you already have that. Now, where are you standing today? Let's suppose we are standing today on 31st March 2026. So it's the end of 31st March. Now this period 24-25, it's already done and dusted. So similarly, if you look at this financial year 25-26, do we have a similar understanding for this? Answer is yes. So here again, you will say that it's a similar understanding that we have for this financial year as well. Now, both these periods, and in fact, various periods prior to these periods as well, are what? They reflect the past information. They reflect the information of past years. So any information you will see in relation to 24, 25, 25, 26, will you be required to make any assumptions for that? Answer is no. Why? Because all those transactions have already taken place. All those numbers are already in place. Correct? All those numbers are already in place. So that's why in this case, what do you find? In this case, you find the information for 24, 25 is actually what? That's history. Will it be right to say that? Answer is yes, that's history. Okay. Or you can say the information for this period is nothing but the historical financial information. Understood? Yeah, Prashant, clear on this?
Yes, sir. Perfect.
Now, let's talk about 26, 27. And let's talk about periods thereafter. We are standing at the end of 31st March 26, means this period is going to come in future. Can we say it's a period which has gone by? No, because we are looking at the future. So how can we say it's a past year? No. If let's suppose management were to prepare the P&L for 24, 25, 25, 26, they will always have that in place, or they can always prepare that basis the data, basis the historical information that they have. But if let's suppose the management wants to prepare the P&L for 26, 27, when do they want to prepare? As on 31st March 26. How will that be possible? See, the transactions related to this future year, those transactions have not yet taken place. So how do you know the numbers? Will you be able to do that? No. Okay. So that's where what do you do? That's where you will make assumptions. What is my expected revenue? What is my expected expense? Okay. Similarly, various assumptions you will make. To do what? To think about all of these numbers for the future. Correct? That's why any financial information that you look at for 26, 27 as on 31st March 26, will you be able to call that as historical financial information? Tell me. Will you be able to call it as historical financial information?
No.
No. Understood? Yeah. Why? Because that's for the future. So I'm just hoping that you're clear on what is historical financial information and what is there for the future. Now,
Yes. Yes.
financial statements. Okay, so it's a very common term for us now, which includes balance sheet, P&L, cash flow, statement of changes in equity, various notes, disclosures. Okay, so this terminology, financial statements that we use. So, in what context do you use that generally? Historical information. Okay, so generally, when you use this term, what would it indicate? Means you are talking about historical data. That's why you may call that as historical financial statements for 24, 25, 25, 26. Now the question arises, can we use the term financial statements for 26, 27 as on today? Answer is yes. You can always do that. The only problem is you will not be able to call it as historical. So that's why, what do you do? Depending on the way you are trying to compute the numbers for the future, you will call that information accordingly. You may call it as projection, you may call it as forecast, or you may call it as a pro forma. Okay, means whatever basis you will follow for this information for the future, right? Whatever basis that you follow, right? What do you call it as? That will be other than historical financial information. Okay. Now, I think in continuity to what of to these terms that we have discussed, I'll also use a couple of more terms, and then we'll get on to our standard also. Now there are a couple of terms we can just look at. Say we have this financial year 26-27. So we are looking at the historical period, okay? Sorry, I think I used this term wrongly. So if we use this period 25-26, now what do you have? You have this information from 1st April 2025 to 31st March 2020. Okay, that's the period you have, right? Now, in this case, what do you do? In this case, you are looking at the full financial year, right? You can say the full year. So generally, when you use this term financial statements, so what do you understand? You are preparing the financial statements for a complete year. Means generally that's the understanding you'll have until unless you have something different. Now, what could that difference be? So let's take one more example. Let's suppose we break this period of 25-26 into 4 quarters. One ended on 30th June 25. Other one ended on 30th September 25. Other one ended on 31st December 25. Other one ended on 31st March 2026. So in this case, what do you do? In this case, if let's suppose we are starting from this 1st April 2025, let's suppose this is the period with which you are starting. Now, many times, for example, take a case of a listed company. They are required to present their numbers, P&L, which are also called as financial information, financial results, say for 1 quarter. They are required to present their numbers for half year, for 9 months. Now, in this case, when those numbers are prepared, when that information is produced, what do you call that as? Interim financial information. Yes or no? Interim financial information. What do you mean by interim? The one that is not for complete year. Now, does it mean that it has to be for a quarter only? No. See, anything which is less than 1 year, that's what you call as interim. Okay. So all of these periods in this case, what do you call them as? Interim period. Right. So the financial information that you have for this interim period, what do you will call it that as? Interim period financial information. Right. So similarly here again you have this interim period. This clear? Now, why are we using these terms? Why are we looking at these periods? We'll understand. Okay. We'll try to understand as to how is this really relevant. Now, before we get on to that, I think it's important to understand the meaning of review. And we can understand this review maybe in a better manner by comparing it with assurance. Or let me just not call it as assurance, I think audit. Okay, now when it comes to an audit, can you tell me what is the scope in case of an audit? Yeah, Prashant, so would you like to share some thoughts that in case of an audit, what is the scope? Generally, I'm saying, let's suppose if you talk about statutory audit, so what is the scope? What is the objective you have?
True and fair view.
Okay, very good. So true and fair view. What do you mean by that?
It's a reasonable assurance that the financial statements present a true and fair view. It's not an absolute assurance.
Okay, so you are talking about reasonable assurance. And when you say true and fair view, so actually you are talking about opinion, correct?
Yes.
Now, what do you mean by review? See, review and audit. Now, audit is what? Audit is nothing but a type of assurance engagement. See, assurance is a large umbrella within which you have some of these different scopes. You call it as examination, you call it as audit, you call it as review. So it indicates that review is also a kind of verification that is required to be done. Correct? It's again a kind of verification. Again, over here, certain procedures are required to be performed by the reviewer. Now, what do you mean by this? See, when it comes to an audit, even though you are giving a reasonable assurance, which is not an absolute assurance, but you can say it's something which is good enough. Yes or no? Means which is quite significant. Okay. To say it's not 100% is understood, but it's quite significant. So if I have to put it in a quantitative manner. But if let's suppose you were to verify something, let's suppose what is your scope? You want to verify something. And while verifying something, what do you want to do? Let's suppose while verifying something, you don't want to express an opinion. Or let's suppose the management doesn't want you to express an opinion. Means they do not want you to give reasonable assurance. So means they will bring you down in terms of the scope. Means they will dilute the scope. So you may say that first of all, you had this absolute assurance that was diluted to reasonable assurance. So are we diluting it further? Answer is yes. Answer is yes, we are diluting it further. So if you dilute it further, where do you go? You may go to review. So in case of a review, you do not express an opinion. What do? You give a conclusion. Technically also that's called a conclusion. Further, when it comes to a review, you do not give a reasonable assurance. What do? You give limited assurance. Means your assurance is further diluted. Right? So that's why you do not have opinion here. Now the question rises that if let's suppose it's again a kind of engagement wherein you are not performing audit, you are actually one level low, or you can say certain levels low, whatever is that, below audit. Okay, certain levels low, below audit. So what do you mean by that? Means what do you include there? If let's suppose you were to do that. So let's try to now understand the procedures. See, in case of a review, because you are giving a limited assurance, so that's why what is your focus as a reviewer? Means what are the procedures you will be on to? Inquiries. One. Number two, analytical reasoning. Okay. Which is substantiated by some documents. So you can call it as substantive analytical procedures. Analytical procedures, I don't think are new to you. You already know what the analytical procedures are. So over here, we are talking about same analytical procedures. But we must also understand that we are talking about substantive analytical procedures, which means if let's suppose you go analyze something, if let's suppose you are performing inquiries, you are performing analytical procedures, you come up with some variance, you come up with some analysis over which you perform management inquiries further. Why? Because you go ask the company. So will you keep it only on the basis of calculations on the basis of variances, on the basis of observations, and on the basis of oral discussions with the management? Answer is no. So again, the objective is not a thorough checking, which you'll do in case of audit, but at least you need to substantiate what the management is saying. So if you go inquire, management is explaining something. So you should substantiate that through some of these procedures. That's why you call them as substantive analytical procedures. Now, does it mean that you will not be able to perform the procedures at all? Means you can't perform the procedures? No, of course, you can do that. See, like any other engagement, this is also an assurance engagement. So here again, what will you have? You'll have these engagement formalities to begin with. You will have planning, again, a very important part. Why? Because eventually you're required to issue the report. And the report is not called as audit report, that's called as review report. But the point is that if, let's suppose, in case of a review, you feel there's a need to perform something beyond this. Okay, let's suppose you believe you want to add some other procedures. So is there any restrictions on that? Answer is no. Okay, so that's the important point, that there is no restriction as such on this. Right? You don't have any such restriction. If there is a need, reviewer can always look into some vouchers, some of the agreements, some of the documents, some of the invoices to his satisfaction. Okay. Now, extent of that testing. So you can call it as test of detail. Yes or no? So what do you call it? As substantive testing, or you can say the test of detail. That procedure is generally known by this name, test of detail. See, over here, definitely the idea is not to get onto the test of detail the way you will do in case of audit. But if, let's suppose, there are certain areas, certain requirements which are important, which are critical, and which in the assessment, as per the judgment, or you can say as per the view of the reviewer, becomes important for him to look at. So will you be doing that? Answer is yes. You will be doing that. Okay, you will be doing that. Yeah. So that becomes an important part. Right? So now we talked about the procedures you will generally find. But as we discussed that it's again dependent on the nature of the engagement, the scope, the complexity of the organization. Okay, complexities that you will face during the course of the review means the procedures that you perform. In terms of anything to be added therein, if at all you feel there's a need. Okay, so that's why you can always have something which is beyond this. So there's no restriction as such, but of course that's not preferred. And that's not the necessity, that's not the minimum requirement. Understood, right? So now what we can do is we can just quickly try to look at both these standards. Okay, so these are called as SREs, standard for review engagements, because it's not an audit. Okay, so that's why you call it as standards for review, right? So first SRE 2400, it talks about engagements to review historical finance. So if let's suppose you have historical financial statement, and what is your scope? Your scope is to review, not audit. So what do you call it as? Engagement to review historical financial statements. Let's suppose if you look at 2410, SRE 2410. Now, what do you mean by this? See, in this case, we are talking about review of interim financial information. Understood? Review of interim financial information performed by independent auditor of the entity. Now, why is that review required? Maybe for regulatory purposes, maybe for the purposes of management. You don't know. Okay, right. So now, as regards these standards, the objectives, some of those engagement formalities, okay, planning procedures around that, we have already talked about it. And as we discussed that inquiry analytical procedures are the one that you really focus upon. Okay, that's the key. So don't really get into anything beyond that generally. Now, in this case, I think what we can do now is just give me a minute. I'll just get onto that document. Okay, so there we are. So I think what we can now do is we can look at this report. Okay, now what do you find in case of a report which is there for review? So if let's suppose it's unmodified, means there is no material misstatement. Now, what are the wordings that the reviewer will use? Or you can say the auditor or the practitioner will use to draft this. Okay. When the practitioner expresses an unmodified conclusion, practitioner shall, unless otherwise required by law or regulation, use one of the following phrases, whichever is appropriate. Based on our review, nothing has come to our attention. Now, this is also called as a negative assurance. Why? Because the way the auditor is communicating is nothing has come to our attention. So he's not saying that we have looked at everything, this gives true and fair view. No, just read this. Nothing has come to our attention that causes us to believe that the financial statements do not give true and fair view. Okay, right. In accordance with applicable financial reporting framework for the financial statements prepared using fair presentation framework, or you may say, based on our review, nothing has come to our attention that causes us to believe that the financial statements are not prepared in all material respects in accordance with applicable financial reporting framework for financial statements prepared using a compliance framework, right? So now in this case, auditor is actually giving a conclusion. He is not giving an opinion. Okay. Now what if, let's suppose a modification is given. So there again, depending on the modification which is included, what will happen? He will use the language. So in this case, if you can see, when it's a qualified conclusion. So now please remember, it's not a modified opinion. So in the exam, please don't use the term opinion. The moment you use the term opinion, that's wrong. Okay, so what do you call it as conclusion? So you can say the opinion is not there, it's a conclusion. So that's the term you'll use for review. Now, in this case, based on our review, except for the effect of matters described in basis for qualified conclusion paragraph, auditor says nothing has come to our attention and so and so. Okay. The same way you'll do for any other type of engagement, right? Then similarly, if let's suppose you have this disclaimer or adverse, so accordingly you can change the language of the report. So I'm not just going through this completely. So let's look at the report format. Title to begin with, then the addressee, introductory para. So in this case, what do you do? Of course, identify the financial statements reviewed, including the identification of title of each of the statements contained in the set of financial statements, date and period covered, right? Then you give the summary of significant accounting policies, other explanatory information. State that the financial statements have been reviewed. Okay. Then the management's responsibility. Now, will that be required? Answer is yes. Why? Because the financial statements that you review, whether that is interim or for complete year, who has prepared that? Management. Who is responsible for its presentation, controls around it? Management. Okay. So that scoping we'll have to specify. Yes or no? So we'll have to specify that scope. So that's very important. Huh? So now this responsibility part, whether it's about the management or whether it's about the practitioner or the auditor in the given case, that's one area you will find everywhere. Okay, so you should not forget this, right? If the financial statements are special purpose financial statements, what do you have? At times they can always be for special purposes. So in this case, what do you do? A description of the purpose for which financial statements are prepared, and if necessary, intended users. See, the moment you say it's special purpose, of course, you'll have the specified users or a reference to the note in special purpose financial statements that contain that information. Okay. And if the management has a choice of financial reporting frameworks in the preparation of such financial statements, a reference with the explanation of management's responsibility for the financial statements, okay, for determining that the applicable financial reporting framework is acceptable in the circumstances. Right? Clear on this? All right. So now,
Yes, sir.
description of practitioner's responsibility. Again, a very important area. And then you talk about this review. Now, what is a review? So I'll say a review engagement is a limited assurance engagement. Practitioner performs, now this part is important. A practitioner performs procedures primarily consisting of making inquiries and applying analytical procedures. Yes, can you see that? So the specified procedures are clearly laid out. So you will not write down the list. No, broadly I'm saying you are just explaining the stakeholders that this is what I've done. But beyond that, will he be able to check if he wants? Yes, he can always do that. Third, procedures performed in a review. Now, this is again a very important part. Procedures performed in a review are substantially less than those performed in an audit. And accordingly, practitioner doesn't express an opinion on the financial statements. Okay. Next, because you don't have opinion, so that's why what do? You'll give conclusion. So you'll include the conclusion paragraph. In the conclusion paragraph, you'll use the same wording that we just discussed in the previous document, right? And then, of course, you'll have the sign off in terms of the date, place. Okay. Next, I think now what we can do is we can just quickly look at this table. Even though we have looked at it, but I would say it's an important part for the purposes of creating clarity, because if you get an understanding around it, then most of the part as around this review, in terms of the procedures, you already know. So actually, in a way, you can say that while planning, what did you do? You have kept your approach to be in the nature of a review rather than an audit, right? So now, audit. Audit is a type of reasonable assurance which provides a reasonable level of assurance. Review is a type of limited assurance engagement providing lower level of assurance than the reasonable assurance engagement. Okay. In case of an audit, what do? You perform elaborate, extensive procedures, including the test of control, substantive procedures. Okay. In case of a review, what do? It performs fewer procedures, primarily focusing on inquiry and analytical procedures. In case of an audit, you are actually giving the it draws reasonable conclusions on the basis of appropriate evidence as well as sufficient evidence. When it comes to a review, what do? You draw limited conclusions. It's not reasonable. In case of an audit, you provide assurance in the form of opinion. And the language of this assurance opinion is positively worded. So you say financial statements in all material respect provide a true and fair view. You don't say nothing has come to our attention that it's not there. The negative language is not there, it's positive language. But when it comes to a review, the language is negatively worded. Hope you got the perspective. Huh? What do you mean by negatively worded? Clear? Right? I think in a similar manner, what do? You will perform the procedures for this interim financial information as well, right? So I think what we can now do is we can just once again try to look at some examples around it. So just give me a minute. Okay, so now maybe this case scenario will pick up slightly later. Let's move on to some questions. Okay, so I'll just share this RTP first of all. Okay. So let's look at this, right? Amar Projects Private Limited, a company involved in turnkey infrastructure projects, is in discussions for a strategic joint venture with a foreign company. Okay. As a part of the due diligence process, foreign entity has requested a review. Now, the important part is what is the scope? Review of Amar Projects interim financial statements. Now the other part important is interim. It's not for complete year. Okay. Yeah. So interim is what period? For the 6 months ended 30th September 24 instead of a full audit. To comply with, the management appoints CA Tanvi, who is practicing chartered accountant, to conduct the review and issue a report under this SRE, whatever is the relevant SRE. Before accepting the engagement, CA Tanvi is evaluating the scope of the review, number one, nature of the assurance, and appropriate format of the report. So these are the three things which are being analyzed. Now, what are the questions for you? What kind of assurance is given in a review engagement? And how is it different from audit? Number one. Number two, what are the key elements that must be included in the written review report as per SRE 2410? Explain whether UDIN you will require. Yes, quickly. Over to you. Shant, any thoughts you'd like to share on this?
So the kind of assurance is a limited assurance given in
Okay.
a review.
Right.
And how is it different from an audit? So audit, we give a reasonable assurance based on substantial procedures, elaborate procedures are performed, and it is positively worded. It is an opinion. In review,
Okay.
we give a conclusion. It's
Right.
negatively worded,
Okay.
and we perform limited procedures, mainly
Okay.
analytical procedures.
Analytical and inquiries, right?
Yes. Right, sir.
Okay, very good. Now the next question. What are the key elements that you'll include in the written review report? So
So
basically, you're required to comment upon, explain the elements of the report.
as per SRE 2410, the key elements would be the title,
Okay.
addressee,
Okay.
management's responsibility.
Right.
The management is responsible for the preparation of interim financial statements.
Okay. What else?
And then the auditors, the practitioner responsibility,
Okay. What else?
and the procedures performed.
Okay. What else? I
And then
think
his
conclusion. So
conclusion will
no.
be there.
Yeah.
Yes, sir.
So will you be including the UDIN here? So do you think you will include a UDIN in the review report? Tell me quickly. So should you be including a UDIN?
Yes,
So
sir.
let's look at this. Very good. So now, see, in this question, I would say it's largely the conceptual understanding that you need to provide. Because they are not trying to bring in a specific case scenario here. Right? So it's all about your conceptual understanding that you need to put down. So now, a review engagement under SRE 2410 provides limited assurance, which is lower in scope than the reasonable assurance obtained. We'll talk about the one which is in relation to making inquiries. Okay. Now, how is it different from audit? We just discussed reasonable assurance versus limited assurance, the language from positive to negative that you use, extent of testing. Of course, that goes down because we are assurance level has gone down, so that's expected also. And you give conclusion actually, right? Now, next one. So let's look at the next question and just share this again. Roma Limited has entered into a contract with Dorma Limited. There's a condition in the contract by virtue of which Roma Limited is required to get its financial statements reviewed for an year on a quarterly basis in accordance with financial reporting provisions of the contract. Can Roma Limited get its financial statements reviewed from a professional accountant in practice? Any thoughts?
Yes, sir. Roma Limited can get its financial statements reviewed from a professional accountant in practice.
Okay. So, what's the understanding around it? If you can just try to explain. Let's look at this. Okay. Now, the above financial statements are prepared in accordance with special purpose framework. So, why do you say that? Because it's arising out of the contract.
Contract.
Okay. So, this is clearly a special purpose. Right? Financial statements prepared in accordance with special purpose framework can also be reviewed by a professional accountant in practice. Yes or no? Next. You are conducting a review of financial statements of a company. Okay, so once again, it's about review. See, in the exam, that's how you'll have to identify this, right? That the terminology review is used, right? Now, in this case, it is gathered upon inquiry that there is a possibility of material misstatement in the financial statements. Now, please remember, we are talking about financial statements and a possibility of material misstatement therein. Discuss how you would proceed further in the matter under SRE 2400. Yes, over to you. Any thoughts?
So he will first of all discuss with the management
Right,
regarding the possible misstatements. And since
okay,
he has evaluated that they are material, he would
right,
request the management to make appropriate corrections
right.
vis-a-vis the financial statements. If the
Okay.
management agrees, then it's perfect as
Hmm.
per requirements. Then it's okay
Right,
for him to issue an opinion. If the management refuses, then he'll have to qualify the opinion, the conclusion, and he may, if possible, if permissible, consider withdrawing from the engagement, if appropriate.
sure. So let's look at this. See, if there are material misstatements, okay, which are possible. So the practitioner shall design additional procedures. No doubt, see the extent of testing will have to go up, that will have to be increased. conclude the matter, so sufficient to enable the practitioner to conclude that the matter is not likely to cause financial statement as a whole to be materially misstated, or determine that the matter causes financial statement as a whole to be materially misstated. Correct. Additional procedures focus on obtaining sufficient appropriate evidence to enable the practitioner to form a conclusion on the matters that the practitioner believes may cause the financial statements to be materially misstated. Now, the procedures may be additional inquiry or analytical procedures. For example, being performed in greater detail or being focused on the affected items. Other types of procedures. Now, what could be those other types of procedures? Substantive test of details, external confirmation. Now, if you go back to the discussion that we had, in terms of that discussion, we talked about three types. Let me just take you back to that document. Okay, so now if you look at this, now in this case, what did we discuss? That when it comes to a review, so you will do these two things: inquiries, number one, and you will do the substantive analytical procedures. But once again, a situation may arise wherein you may have to get on to some other procedures as well. Okay, now that other thing could be anything which could be in relation to the test of detail. So the same thing we have in the given situation as well, right? Okay, so now let's move on to one more. So let's look at this. Just give me a minute. Okay, so let's look at this case scenario now. So below is an incomplete draft text of the review report. Now, which is in relation to the review of financial results of Fast Operations Limited. So it's a listed company in accordance with SEBI regulations. So the review is a compulsory requirement under SEBI. The incomplete areas of the report have been marked as XX. So wherever, so you can say it's a sort of fill in the blank. Huh? Independent auditors review report on review of interim standalone financial results. To means to whom it is addressed is not given. We have reviewed the accompanying statement of standalone unaudited financial results for the quarter and 6 months period being submitted by the company, okay, pursuant to the requirements of SEBI. The statement, which is the responsibility of company's management, approved by board of directors, laid down as per the requirements of accounting standards and other accounting principles, our responsibility. And then, of course, this remaining part of the report is missing. Next, we conducted our review of the statement in accordance with standard. Then again, it's fill in the blank. And it says review consists of making inquiries primarily of company's personnel who are responsible for financial and accounting matters and applying analytical and other review procedures. A review is substantially, now there again, they have just not given the remaining part. Based on our review conducted, I think this is all about that sort of opinion, conclusion, whatever you provide. So that is again missing. So now in this case, I think as a part of this fill in the blank, what do you need to do? I'm sure some options will be given wherein you will be required to fill in the blank. Okay, yeah. So let's move on to this. So first, answer the following questions to complete the draft text. First, name of the addressee is missing from the text. So to whom it is addressed is not given. So now in this case, what do you think? Where should this report be addressed? Audit committee, board, CFO, or the stock exchange? Yes. What do you think? Which one is the right option? Yes, Prashant, any thoughts? To whom do you think this report should be addressed?
B, board of directors.
Board of directors, right? And why it's the board of directors? Because it's meant for SEBI purposes. See, it doesn't reach out to the management, of course, to say you'll address it to CFO, stock exchange. This is completely out of the context, right? Then do you address the report to the audit committee? Answer is no. Okay, so you'll always address it to the board of directors. You don't address it to the members because that's what you will do in case of statutory audit, not in case of there's a review as per the SEBI regulations. Next. So if you look at this para 2, you are required to talk about this aspect. So if you go back to this para 2, so somewhere when it was talking about our responsibility, so you had this fill in the blank. So you are given some options, you need to comment upon it as to which one is the appropriate one. Our responsibility is to express an opinion. Our responsibility is to express a conclusion. Our responsibility is to provide a reasonable assurance on the statement. Our responsibility is to express a compliance statement. So which one do you think? I think this is again quite straightforward. Yes.
B.
B, very good. Because in case of a review, what do? You are giving the conclusion. Next. Which of the following engagement standard is most appropriate to be stated in the para 3? Yes, quickly. I think this is again quite straightforward because you are told that we are
A.
looking at financial results.
A.
A, why? Because when you talk about SRE 2410, so you are talking about interim financial information. You are not talking about historical financial statements. So wherein you apply SRE 2400. Anyways, if you look at the options and if you get confused, C and D are completely not possible. Correct? Fourth, which of the following statement is most appropriate? So I think now you have this detailed para. And this is in respect of review. So now I think the para explains the review. So what do you have in case of review? Review is substantially what? A. Review is substantially broader in scope than audit. I think I don't need to read this further. B. Review is substantially broader in scope than audit.
C or D. If D is there, so either C or D, something.
Okay, so I think A and B are completely off. Yes.
Yes,
So
sir.
let's read this C and D. A review is substantially narrower in scope than an audit, or then it gives the reference and consequently doesn't enable us to obtain assurance that we would become aware of all the significant matters that might be identified. Accordingly, we do not express audit opinion. D, it uses the same paragraph in terms of the wording. I think the only wording it changes happens to be less in scope as compared to narrower. So which one do you think is technically the right one? Less in scope. Yes or no?
Yes, sir.
Right? Okay, so D is the right one. So last one. Complete the paragraph 4. So I think the paragraph 4 was all about the conclusion. So wherein you give the negative assurance. Limited but negative. So in this case, so if you look at the option, so here again we have these large paragraphs. But if you read this option number C and D, can we have that? Answer is no. Why? Because these are not negative wording. Correct? These are
Yes,
not
sir.
the negative language. So C and D are completely off. Now the only choice you need to make is from A and B. So let's read both of them. Nothing has come to our attention that causes us to believe accompanying statement prepared in accordance with recognition and measurement principles and the other accounting principles generally accepted has not disclosed the information required to be disclosed in terms of SEBI regulations or that it contains any material misstatement. Okay, next B, let's read that and let's also try to compare as to what is the difference. So it says nothing has come to our attention as regards this accompanying statement prepared in accordance with recognition and measurement principles laid down in Ind AS and other accounting principles, has disclosed the information. So, B, if you read, do you think that will be appropriate? Answer is no, because if you are reading the, if you are putting down this language in a negative manner, so what is the wording you'll use? Nothing has come to our attention that it has not
That
disclosed. Because if you
two
say it has
negatives,
disclosed,
two negatives cannot come, sir.
no, so the two negatives means A has to come. Only then it will make sense.
Yes, sir.
Yes or no? Right?
Yes,
So
sir.
that's why which one is the right option? It has to
A.
be A. Okay. All right. So with this, I think we are through. So we can just conclude the discussion now. So thanks everyone once again for your time today and for this wonderful participation. Thanks so much. We can just close this session. Oh, okay. I can see Karuna ma'am is here, so she may continue. So thanks everyone from my side. Over to you, Karuna.
Thank you, Achal. Thank you, my dear students. This was the last LVRC, right? I hope you have thoroughly covered all the topics. You have prepared your notes, you have studied in depth, and you are doing writing practice also. If it is not, then please do that. And please share your feedback for this LVRC. If you want us to improvise further, your feedback is very important. So we request you to share your feedback so that we can work on the same for future. Thank you. Thank you very much. In case if you find any difficulty in any of the topic, you can definitely reach out to us. You are already having our number 01203045 and you're also having ask your query feature with you. With the help of that, you can reach out to us and you can ask your query. With this, thank you Achal sir for sharing your knowledge, your experience, and thank you to technical team, BOS support team, and thank you dear students for your patience learning. And I hope you have covered all the topics properly. And now it's time to revise and do the MTP practice. So MTP series 1 is already being conducted and series 2 is just commencing shortly. So please do attempt mock test paper and sit in the examination condition. If possible, sit at 145, just like your main examination. 225 is your paper. So do that and analyze that paper. And in case you find any difficulty, please contact us. And with this, you will be able to analyze where you are where you are committing mistakes, and you will be able to correct. And you will be able to work on the same and improvise further. Right? With this, thank you very much once again. Thank you. All
Thank
the
you.
best to you. Thank
Thanks.
Thank you,
you.
ma'am.
Thanks.
Thank you,
Thank
sir.
you.
Thank you, Achal,
Thank
sir.
you.
Thank
Thank you,
you.
ma'am.
Thank you, Achal.
Right. Thank you.
Thank you. Bye. हाँ जी